It's that time of the quarter again, and we get to see some major insider sells from the big guys at the top. Note though, there have already been sales by other insiders in smaller amounts earlier in the year, but leadership is a bit more interesting, what I like to cover. But for the scale, really quick, we've got Shyam Sankar with two transactions selling 225,000 shares at $23 million dollars and another 375,000 shares sold for $38 million. dollars. Then Stephen Cohen selling 405,000 shares for almost $42 million dollars, and CEO Alex Karp selling 585,000 shares for almost $60 million dollars this round. So in total, we do get some liquidation of over $160 million dollars in shares. Now, with the excitement around the company and, of course, the stock itself, I find it's always a good time to talk about how these are from pre approved trading plans. All of it is to remove the insider information factor, considering they are literally management or board of directors and steering the company in its direction. But this also has been in the news recently around Karp's change trading plan. And yes, you can look as deep or surface level as you want if it's a good or bad thing. But I find it interesting as someone covering the company is seeing how their dollar cost averaging, at least in the opposite direction here of selling instead of buying, has yielded them these fluctuating cash out events. I still remember seeing them have these automatic transactions below $10 a share in the teens, 20s, and at least where we are today, much lower, of course. But today, we've seen their market cap fluctuate from like less than $20 billion, as I mentioned, to over $270 billion, and obviously a little less today because of the recent sell off. But that's the beauty of it. The decision making is out of the insiders' hands, and they are predetermining when they are liquidating far in advance to avoid any legal troubles from the SEC as by design. Now, when the Form 4s are out in a couple days, for those who are new, this is business as usual, which will show they obviously still have a substantial vested interest in the company with the remaining shares, and isn't an issue in my personal opinion, of course. But this threshold is personal as noted, and only you as an individual can determine what is too much insider selling to you, even if it's a pre-approved trading plan also. There's no right or wrong answer here, just your own opinion. Especially for Karp, leading the company through decades, who I think deserves to be compensated, which has been mostly in shares. I always like to draw a comparison to professional CEOs versus founders. They come in a few years, hit their metrics, get those shares awarded, cash out as needed. The vested interest is in getting the short-term rewards, of course, which is still obviously a factor for Karp too in his compensation plan. But you can argue at least sticking around for decades and being a co-founder here, there can be a little bit more motivation than just the money itself, although it hasn't been bad at all with the recent share price action. So please, sales are sales and just facts. Do as you want with this information. Everyone's got their own opinion on what is too much, too little. Sometimes any selling, even if pre-planned, is looked down on by some people, while others and myself are in the middle. There's obviously a limit to everything. And once we see that, especially in proportion to the remaining holdings, I think that will be much more telling. That's when I'd have a different opinion. But what are your thoughts though below? And I'll see you in the next video.